I made a lot of profit trading SPY today. Now, it wasn't that easy, but if you understood my thought process and planned ahead, you could do it for yourself too. And I will also use this video to explain some mistakes that I think beginner traders will make and how to avoid them. And I just want to reiterate again that trading, it's not about the size of the profits. It's all about being consistent, knowing that you had a plan, that it worked, and that the profits are not out of luck, but out of good analysis and skill. So that's what we want to achieve as traders. So the size of the profits doesn't matter, not to me. I feel that having consistent profits and knowing that you have developed a high income skill of trading is really much more important. Yesterday was a great day. We've planned for it for a long time, and I'm glad it turned out well and we could reap the rewards. And I'm going to explain my thought process because it was not one day effort. It took a while to plan these trades that we had today to make this much profit. So let me explain what happened and how we could get there together and how you can get there together as well. So well, it wasn't just me. Members did very well as well from the past few days leading up to today. We had really great profits, good profits. So obviously profits came from this large green candle here. Well, most of it anyway. I took my trades here actually. So it was a larger movement than that. And I'm going to run through first some beginner mistakes from yesterday's FOMC trades and how to prevent them. So right in the morning, as you can see, we were trading probably in a 2-point range here, up and down, right before Powell came at this point here where you see all the whipsaw. So I told members to try not to trade in the morning, right? If you don't have open trades, try not to trade right here in the morning. Now we had a member who took puts here at this level here very nicely from our level and closed it right here, but yet he had no profits. Now, this is not an ordinary drop. It's a almost 2.7 points drop. And he did not get any profits from this, even though he got the puts here. Now, this is because of high implied volatility of options. And so this was why I discouraged members from trading in the morning. I say take a break, restore yourself before the afternoon trade, sleep in a little. And this is the reason why. So sometimes we don't always have to trade. We have to find the best time to trade. Now, we have to remember the purpose of options. Right? Options, just think of them as a form of insurance for the stock market. So their main purpose is to be as much as possible in the money so that they can be exercised to buy or sell that particular stock at that price. So it's a form of insurance for the stock. So if there is expectations that SPY, for example, is going to trade at a very large range today, which is definitely what's going to happen because of FOMC. Now, whatever Powell is going to say is going to affect the stock price of SPY, and yesterday SPY went up 12 points. So you can imagine that all these are priced into your options, right? So options as an insurance has to be priced in for this 12-point move, for example, right? It's like, for example, if you have pre-existing medical conditions, your insurance is going to be more expensive. That's just the logic behind it. Everything is priced in. This is how the market maintains its form of efficiency. So in the morning, people were expecting big movements in the stock market. So the IV was extremely high. So if you were to take your puts here, for example, and I think he closed it here a little much later when people started to trade less, right? There are more people that wanted to trade here. That's why you see a lot of people are just selling their position, right? To get ready. And you sell it later when the IV is restoring back to a more realistic level. So let's say the IV here, I'm not sure. I think it was 100%. I'm not sure for 0 day to expire. And I think it dropped here to about 70%. Now 70% is still high. The usual is maybe 9 to 20%. So you can imagine it's still high, but because it dropped from something that was much higher, your options lost value immediately, even though the chart dropped by 2.5 points to your favor. So this is an example of what we call an IV crush. And we have to be very careful when we trade in environments where there is expectations for the stock to go up and down. Now, this is very common in earning reports for individual stocks. And for SPY, as one of our members rightly pointed out, FOMC meetings are like earning reports for the indices, in this case SPY and the Qs. So we have to be very careful of implied volatility, or IV. Now, by the time that the market had a certain direct, right, we see that the chart has just went all the way up from here, isn't it? A 12-point rally from now. By the time that happens, there was certainty in the market, right? So IV will be continuously dropping. So even if you had calls from here, for example, you would have lost value because IV has dropped, right? Once the market has certainty, your options will become more worthless, on top of time decay as well. If we were to get here, especially 0-day to expiry options, you waited for about 4 hours before you decide to close. Not only are you fighting against time decay, you're also fighting against the IV. So sometimes it's important to understand the risks involved when taking options, and to understand that it's not just the price movement up and down. These are not binary options. That's another topic altogether. So understanding what makes the price of your options are very important before you take the trade. So part of my profits were also taking advantage of this high IV, and that's how you should trade FOMC in future. Now, I took my calls mostly from here. Now, if you watch my videos 2 days ago, I was talking about taking calls here, especially when this candle was red. Try to take calls as much as possible here. Now, I took the calls here, maybe when my IV was really low, maybe 20%. And when it reached this point here, when it closed, it was at least 50%. So I not only made money from the rise of the stock price, I made money as well from the IV that increased. So that's the value of the options, and that's how we want to play FOMC days next time. We understand that during FOMC there will be big movements. Remember the price trading ranges that I was talking about. So I mentioned that this part here, we were trading at 50 basis points here, if you remember. Then out of nowhere there were news about 75 basis points here, right? Powell came to speak live. Now, he never mentioned 75 basis points, but the market started to have chatter about it, and it brought us down to this level. And then there were more fear that brought us down to even further level. So 50 basis points has always been priced in between the 425, if I'm not wrong, to about 450. Now, this was 50 basis points being priced in. Only with that chatter of a possible 75 basis points. Now it brought us down to this level, right? Any lower, there would be 100 basis points maybe, or even worse, they will bring us down. Now, it was at this point that I felt that the market was really pricing this out of proportion. I've always insisted that Powell never mentioned about 75 basis points. He never did, right? Although there were possibilities, and the market has already priced in here. Secondly, I was always talking about how this structure is protecting us, right? There's calculated risks, right? So I would be dying to take calls here. Now, to be frank, I took some losses here for the calls, and I've really stated that. I took a $600 loss for some swing calls that I took here. So there were casualties, but if you held on to your conviction, you would realize that taking calls here is truly a no-brainer. You just have to keep trying to take calls till you get it. And once I managed to take calls here, I did mention that just before FOMC, what's going to happen? The market's going to price us back in here, because the shorts have to be covered before FOMC, and I mentioned that in a previous video. And we have to come back to this 75 basis points range to prepare for something that's worse. or something that's better. That's just how the market wants to position itself. So we started flagging here Wednesday morning as well as on Tuesday, right? So you see Tuesday's doji here. We were just flagging around this area. Now Wednesday morning we were also flagging around this range before we had this 12-point rally. So this day was crucial. Now this day was an extremely fearful day, until of course we had that last minute rally where the big money started to come in. I was really bullish that day, but I had a casualty, like I told you, the $600 loss. And sometimes it makes you lose your conviction, right? But you have to understand, if you have a game plan going on, if you have very good risk management, you understand that this is a good time to take calls, because we are probably at the lowest. We had very good support from Apple, from Microsoft, and from the Qs. So there were a lot of technical analysis that favored our play right here. So we decided to continue to take calls. And when did I decide to take calls? Right, I took calls on Monday, right? Monday at around 3 p.m. Right, especially after SPY reclaimed yellow and pink, and I'm going to load up swing calls, and I really loaded it up. Yeah. I was thinking that it would form a nice hammerhead doji, and it did. It was slightly red. It was a little, just small doji back then. And then, of course, the market continued to rally until 4:15, I think. So I managed to take calls around 4:09. And that video after that, I mentioned that this was a signal for the bulls to come in, cover shorts, get into position before FOMC, and then FOMC happened. Now, FOMC was also overpriced because we knew that firstly, Powell never ever mentioned 75 basis points, although the market has priced us in at 75 basis points. So this is excessive fear. And if we do get 50 basis points or even 25 basis points, we will certainly rally from there. So we had some form of understanding and a play from that. If it was 100 basis points, I would obviously be playing puts, close out my calls from here with some good profits, and took puts. By then, my calls were already up with profits, right? With the high IV, and also maybe a 5 to 10 point move from there. So they were quite safe, and it helped me psychologically to make good decisions from there, non-emotional decisions. So getting into position, as I always mention, is extremely, extremely important in trading. I took losses to get into position, and sometimes we have to do that. Now in chess, I liken this to sacrificing some of your pieces just to get into position. It's necessary. In a chessboard, for example, you can't have too many pieces. Your plays just can't materialize. So sometimes you have to know what are you doing and do some maneuvers like this to have a carried on play. Now obviously this does not happen every day, right? FOMC does not happen every day. SPY does not have a 12-point rally every day. So this does not come every day, and therefore it takes some time to practice to know how to play this. Now I just want to say again that we are trying to develop a skill here. So the first skill is that analysis skill, right? We understand that how the market has priced the trading ranges in, and we realize that the market at this point in time is just priced out of proportion, right? In fact, we are underpriced here of SPY if Powell says something good. The second skill is, of course, risk management, right? We understand that there is a very good clear stop loss here for us to try to take calls. Right, if SPY were in the middle of nowhere here, I wouldn't have loaded up my calls so readily. So having a good form of risk management here, it's very crucial. We can watch some of my videos before this, just before this. I talked about taking calls here and the risk management involved in it. And understanding that SPY is made up of so many other components really did help, because the Qs were at critical support. Apple was at critical support. Microsoft was at critical support. And Apple and Microsoft had really good earnings. So these technical indicators will still hold despite the market fear. So there are some risk management that we have to be paying attention to, right? And thirdly is, and to know your risk tolerance. And I have to reiterate again, I am not always 100% correct. I've taken losses in trying to open calls, but in the back of my head, I know I have to open calls here. And I did mention this was made easier because I had open puts from here. So you see, it's all about chaining up your plays. Because I had open puts from here, taking calls here in a risky position alleviated my psychological barrier. It made me more willing to open calls, to sacrifice. Maybe in this case, I sacrificed $600 trying to open a swing, because I know that this $600 will be covered by the puts if it went the way down. So I closed my puts anyway around here. It was up maybe $3,000 here, and I closed it for about $800 here. So I lost about 2,200 possible additional profits, but that's fine, right? It's a good trade I could take, because I made a few more $100,000 from this move. So it's not about getting that perfect trade, but it's all about understanding your risks, trying to build a game plan, a strategy, sticking to that strategy, and just playing along what the market brings you. Now, I closed my profits early as well, most of them. Some here I closed probably about 425 when the market went all the way to about 429, 430. Right, I lost about 5 points here. I closed some position, not all. Right, and that's fine too. Sometimes we don't have to be too greedy. Right, this is my profit target here at 425, and we take the profits away. Right, we don't get too emotional about how the chart moves. We have a plan. My plan was that we were trading at a lower high. Remember, that was the plan. I took my profits here. It's good enough. I have a few runners. Right, we'll see where we bring us to, maybe even higher. I'm going to discuss this in the daily brief later. Where will we be trading and how to trade after FOMC today. So do check out that video later. It'll be available in Patreon. Right, so psychologically you have no fear of missing out as well, right? Because you stuck to your plan. So these are skills we have to continually developing. Hey, but if you missed out on planning long term for this trade, that's not a problem, right? Because also on that day, if you were to be playing just on FOMC day itself, right? If we were listening to the analysis, right, it was at this point, let me take a look at the 1 minute chart. At this point here at about 2:38 p.m., right, we made an analysis, and Powell said about 50 basis points for the next 2 months, right? And that's actually bullish, right? That's actually bullish. But I did mention to be wary of some whipsaw action at 2:38 here when the candle was still red here. Now, if you had conviction, if you understood the market context here, and Patreon members would understand that, because I clearly mentioned about the trading ranges here, right? We're 50 basis points, we are heading right up, right? 75 basis points, we will be stuck here at this range here. 100 basis points will be going down. So we had very clear understanding. And with that clear understanding, right, when you're triggered by the words 50 basis points, you would take the trade, right, with good risk management here. Now, we would still be expecting whipsaw, because 50 basis points is still relatively risky. It was 25 basis points, calls would be a no-brainer. And we did experience some whipsawing right after, you noticed, right? And this looks simple, but it's not. It's a 2-point whipsaw. Whipsawing is dangerous. Why? Because your stops have to be a 2-point stop in order to protect yourself. So that's the danger of that. And even if you miss this, right, there was another trigger word. He said at around 243 that 70 basis points is not something the committee is considering. 243, let's see, where were we? 243, we were here, right here, right, exactly after the whipsaw, right, after the whipsaw, right here, 243. Now this is when we have to take calls, right? 75 basis points is not what the committee was considering. Right, this was at a 418 level, right? This price range was about 418, and we rallied all the way to 430. So that's the 12-point move right here, 12 points, right from where Powell said that. So before we go into FOMC, we have to be prepared, right? So all these were already trigger words, right? And Patreon members, I told them about this. When we are prepared on the day itself, we could have just taken the calls. You would have rolled up 12 points. Now, you don't always have to be prepared to take early. Now, taking early, of course, has its merits, have its benefits, right? I'm less stressed about trading on the day itself, and I can spend time giving analysis like that and run through the information. So that's why I wanted to take early trades, and I didn't truly day trade on that day. But you could still have done that with good knowledge beforehand, right? With good market context beforehand. What I said to members, that there is truly no fear of missing out, okay? Because most professional traders, they don't trade on FOMC days. They trade after FOMC. So there's still a lot of action that we can be reaping the rewards from, and I'm going to explain that in the daily brief later. So in summary, I think we are trying to be developing a very good skill of a day trading. So understanding market context, understanding your risk management, knowing how the options work and taking advantage of them. I think these are skills that you can pick up if you trade every day, or be with a group, a community of traders every day. So I really do encourage that you join a Discord server. It could be mine, could be someone else's, something you believe in, you have similar values in, and trade every day, or just watch an analysis, or be with traders of that sort every day. One with positive energy, and some place that's encouraging to help you in your trading journey. You will develop this sense, this market analysis, this sense of how the market works. You will develop very good risk management, and from there, you're able to be trading better each and every day. You develop your own rules, you develop your own winning routine, and that can be repeated and be on demand. I think that's the goal of why we are trying to learn day trading, isn't it? So if you're making this amount of money because of luck, I keep saying that if you're making profits because of luck and you have no idea how you did it, that sense of victory is hollow and empty. What you want to know is that I could do this 300 over 1,000 today. I can do it another day again, right? And every single day I'm able to keep making money if I choose to do so. Now that's the type of skill and that type of confidence that we want to be creating for ourselves in order to achieve financial freedom. Now it's not money that gives you financial freedom, right? Always remember that. It's the knowledge that you can make money that will give you the freedom. And that's way more powerful than what money can give you. Winning the lottery does not give you freedom. I have to tell you that. But understanding how to create this income, having that skill gives you that freedom, not just financially, but also it sets you free. It truly sets you free mentally. It sets you free spiritually. And that's what we're trying to do here in this channel. We want to be imparting that knowledge of trading, the understanding of that. And this is such a great tool, right? The market's open almost 200 over days a year. It's open almost every day. The market is trading. This is a $60 trillion market right here. There's so much money to be made here. There is just great availability. You can trade on your desk. You can trade from your phone. It gives you so much financial freedom, so much freedom in your time as well. And so why not? Why not pick up a skill in trading, right? And really put your mind to it, study it, devote yourself to it, and this truly is great. This is life-changing. I can tell you that this is life-changing. Telling you it's not the money that's life-changing. No, going to casino, you can do this in a casino. You can make this money in a casino. What's truly life-changing is developing this skill, that it will stick to you to life, that you will have this high income skill that you can use every day. So today, commit to yourself. Tell yourself that you want to make a difference, and it involves hard work. The successful traders I've known, that I've met, they put in the work. They study hard and they understand what it takes in order to develop that skill. It's not just for the money. Don't do it for the money. All right. So thank you very much, and I look forward to the next FOMC with you. Let's continue to trade. I think SPY is a great instrument. There's so much money to be made from here. So thank you very much for watching, and I will see you in the next video.